Have you ever wondered what it's like to ride a roller coaster that only goes up? Welcome back to Dragon House Trading Academy, where we decode the buzz and bring clarity to the chaos of the stock markets. Today, we're diving into a thrilling update from the financial world. The Indian stock market is making a comeback. Why is this important, and why should you care? Stick around, and all will be revealed. Main content. First, let's set the stage. After a period of downturns and uncertainties, the Indian stock market is showing signs of a strong rebound. What's causing this shift? Several factors are driving this recovery, and understanding these can give investors like you an edge. Let's break down the main elements fueling this comeback. Point 1. Government reforms. Recently, India has seen significant reforms aimed at boosting economic growth and investor confidence. For example, reforms in foreign direct investment (FDI) policies have made it easier for overseas companies to invest in Indian businesses. Let's take a closer look at one key reform: the introduction of the Goods and Services Tax, or GST. This reform simplified the previously complex tax system, making it easier for businesses to operate across state lines and reducing overall transaction costs. Here's an example. Consider a company manufacturing in Mumbai and selling nationwide. Pre-GST, they faced different tax rules in each state. Now, with a unified tax system, overheads are lower, and profits can rise, positively impacting stock prices. Point 2. Improved global presence. Indian companies are increasingly going global, enhancing their reach and capabilities. Take the tech industry, for instance. Companies like Infosys and TCS are now recognized worldwide, attracting foreign investors and boosting stock values. Let's visualize this with a graph showing the growth in global market share of these companies over the last 5 years. Moving to point 3. Strengthening economic indicators. Key indicators like GDP growth rate, inflation rates, and employment figures are showing positive trends. I'll pop up a chart here comparing the economic indicators from the past 5 years to the projections for the next year. This chart clearly shows a steady increase in GDP, a stable inflation rate, and an uptick in job creation. Point 4. Rising consumer confidence. As the economy strengthens, so does consumer confidence, which translates into higher spending and investment. Did you know? A recent survey showed a 10% increase in consumer confidence index, directly correlating with market performance. Story time. Let's talk about Mr. Sharma, a retail investor from Bangalore. Just like many other Indians, the positive market trend has encouraged him to invest more in stocks. 2 years ago, he was hesitant, but now, seeing the stability and growth, he's planning to double his investments. Outro. As we've seen today, the Indian stock market isn't just bouncing back, it's paving a way for robust economic growth. If you found this breakdown helpful, imagine what else you could learn and leverage by subscribing to our channel. Don't forget to like, share, and comment below with your thoughts or questions about today's topic. Is there another aspect of the Indian stock market you want us to explore? Let us know in the comments. Thank you for watching, and remember, stay informed, invest wisely, and watch your portfolio thrive. See you in the next video where we decode more financial buzz. AI is poised to significantly impact educators and course creators on social media. By automating tasks like content generation, visual design, and video editing, AI will save time and enhance consistency. This allows creators to focus on higher-level strategies and ensures a cohesive brand presence. Personalization is another key benefit. AI can analyze social media interactions to tailor content to individual learner needs, making learning more engaging and effective. This level of personalization, previously difficult to achieve at scale, will become more accessible. AI also offers advanced analytics, providing insights into content performance and audience engagement. Creators can quickly refine their strategies based on real-time data, ensuring their content remains relevant and impactful. However, the rise of AI brings challenges. There's a risk that over-reliance on AI-generated content could diminish authenticity. Automated content might lack the personal touch that makes learning experiences unique. Educators will need to balance AI efficiency with maintaining the human element in their content. Ultimately, AI will be a powerful tool for those who embrace it. Educators and course creators who adapt will likely expand their reach, improve content quality, and engage more effectively with their audiences on social media.